This breaking now, Statistics South Africa has just released the unemployment figures coming out, released from the quarterly labour force survey of the first quarter of 2021. And to help us unpack some of the issues, we're joined now by economist Johannes Khosa. He's an economist with Nedbank. Thank you so much, Mr. Khosa, for making the time to talk to us today.
Thank you. Good morning, everyone.
It's a marginal increase, but it's an increase nonetheless. How does it speak to South Africa's efforts to, revive its economy?
Yeah, well, it's not a surprise to us that the unemployment rate continued to increase. I mean, it's reflecting, the damage that was caused by the lockdown in the economy. So it's affecting the extent in which the business activities and confidence was hurt. So companies are still feeling that pain. But the good news is that, in the economic side, we have been seeing some gradual improvement when it comes to economic activity, but companies are not rushing to improve their employment numbers at the moment, but rather they are focusing on repairing their damaged balance sheet and some profitability that was hurt by the lockdown.
What are the impacts of the continued lockdown, and how is this hampering people's ability to access work and livelihoods?
We should remember that, this upward trend in unemployment didn't only start now. It only started well before the COVID-19 broke out. So, I mean, we've been having some structural issues that have been hampering companies' capacity or confidence and their appetite to expand. I mean, if you talk about things such as electricity shortages, things such as policy uncertainties, I mean, those factors are weighing negatively, and companies, as a result, they are very reluctant. At the moment, we've been seeing the developments in terms of the labor union negotiations, which are not aligning with the demands that the workers are demanding when it comes to the pays. So those factors all combined, they are affecting business confidence and the companies' willingness to expand and employ more people.
What are the specific drivers of policy uncertainty in a country where both the president and the government have committed to developing relationships? Just last week, we saw the South African president meeting with the French president in another effort to increase trade in South Africa and, by extension, jobs.
Well, specifically, some of the negative factors include, the things such as the distribution of land without compensation. I mean, if you don't have certainty in terms of whether your firm or company will stay in a certain place for a particular period, or whether you will own that land, you are not likely to invest in that. You're not likely to put all the money that you need to invest in that particular area. So such noises are distorting the investors' confidence. But I mean, it's encouraging to see that government is intervening and they are doing their best to fix those issues. But at the moment, we don't expect it to help to reduce the unemployment rate significantly. I mean, if you check, we did some analysis in our numbers, and we don't expect the level of employment to return to the pre-crisis level anytime soon, at least after 4 years or something like that.
4 years? That's really worrying. Well, I suppose it's a bitter pill to swallow. But just in terms of what can be done to change the situation around, what sort of data is coming through in this regard?
I mean, if you look globally, we've been seeing a recovery in demand. So the industries that are focused or that are linked to the export market are benefiting. I mean, the likes of mining and manufacturing, those industries are benefiting from improving global demand as well as high commodity prices. But again, when you look at the domestic market, demand is also picking up, even though marginally. So the industries that are also focusing on the domestic market market are also seeing some improvement, but we don't see them improving to a pre-crisis level anytime soon due to the factors that I've mentioned earlier. I mean, if we still have load shedding in the picture and business confidence is struggling to pick up, companies are also very uncertain to start expanding their capacity aggressively. I mean, we also still have the uncertainty when it comes to the pandemic. I mean, now we are entering the third wave. So if that will result in tightening of lockdown restrictions, obviously business will remain wary of starting to expand their operations.
Yes.
So that will have a negative effect on growth in employment levels.
You're talking about industries that have done well, and one of those is the computer space, where because of online interactions during the lockdown, we've seen sales for computers and tech products skyrocket. But is it just the tech owners who are benefiting from this windfall, or how can workers be included in this success story?
Yeah, I mean, like working from home, I mean, it's been one of the developments that just came in, and the technological front, they are taking advantage of that, you know. Well, I think what should happen is that, you know, instead of maybe laying off people, policymakers and companies should understand that, you know, we have to share this pandemic together in terms of, instead of firing people, they should negotiate their pay terms, maybe cut salaries instead of firing them altogether. I mean, if you look at the pharmaceutical industry also is benefiting a lot from sales of vaccinations and the multi-nutrients that will prevent the impact of COVID-19 in those people. So those health and technological industries are benefiting a lot. So I think they should rather try to absorb the loss that we have had in terms of employment. So, yeah.
Thank you so much for talking to us today. Johannes Khosa is an economist at Nedbank, and reacting to that story that unemployment figures have reached other highs, 32.6% from 32, up from 32, the previous 32.5 in the last quarter in 2020. Let's now bring in Dr. Khosa. Dr. Khosa, thank you so much for making the time to speak to us today. Your response to this announcement that unemployment figures have gone up to 32.6%. Were you expecting this? We seem to have a problem with the line to Dr. Khosa, but we'll continue to try to. Dr. Khosa, I don't know if you can hear us now. I was just asking for your reaction to that announcement by Stats SA that unemployment in the country has gone up to 32.6%.
Yes, Desiree, it is not unexpected. We knew that our public health crisis that came as a result of the COVID-19 outbreak will have naturally triggered economic shocks. So last year already, since the commencement of the lockdown, we know that a number of people lost their jobs, especially in the hospitality industry. A lot of mining companies also shut down their operations in provinces like Limpopo, Mpumalanga, and also elsewhere. And also the manufacturing sector was also heavily hit by the outbreak of COVID-19. But unlike other developed countries, for example, the US and the UK, which were able to implement or employ stimulus packages, they were able to cushion the effect of COVID-19 in terms of guaranteeing income for workers involved in the hospitality industry, and largely those who were affected by retrenchments in other sectors. So developing countries, which South Africa we are part of, it is inevitable that as a country will be heavily affected by economic shocks manifesting through the high levels of unemployment.
How do you think going forward the continued lockdown will continue to impact an economy that's really putting in all efforts to try and regain its stature and its place on the continent and in the world?
Yes, the good thing is that African governments, since the commencement of the lockdown last year, in our case in South Africa, there was acknowledgement that there should be some economic activity that is allowed to be carried out, especially in the mining sector, the agricultural sector, which was not heavily affected by hard lockdown, and also the opening up of the economic spaces, but also putting in place, in our case in South Africa, we know that the South African government has announced economic revival plan that has to do with the reconstruction of our economy and also ensuring that our economy is still able to attract both domestic and foreign direct investors. That has been achieved in part, especially in the automotive sector. We have seen Ford also investing billions of rands or announcing billions of rands as part of pumping money into our domestic economy. So the manner in which the South African government proceeds to effect some of the measures that are contained in the economic revival plan will also ensure that as a country we are able to quickly recover from our economic shocks. So we require a lot of commitment from policy implementers. There should be commitment also from economic departments that are part of government in terms of ensuring that they're able to speedily and expeditiously implement some of these economic reforms.
Dr. Khoma, thank you so much for availing yourself. Would have loved to speak some more, but time constraints don't allow. Dr. Khoma is a political economist and talking to us about that story that will clearly or obviously be carried forward by On Point coming up next. But from the agenda, thank you so much for watching. Till next time, bye-bye.